Hi friends, in this video we are going to discussing about NISM VA Mutual Fund Distributors Exam. Mock test for chapter 2. First question. What is the primary legal difference between a mutual fund and direct investment in securities? Option A. It offers higher returns. Option B. It provides better tax benefits. Option C. It operates through a trust structure. And option D. Mutual fund avoids SEBI regulations. Correct answer is option C. Mutual fund operates through a trust structure. Actually, it is constituted under the Indian Trust Act and Act has pooled investment vehicles, while direct investments are not structured as trusts. Next question. How do multi-cap funds differ from large-cap funds under SEBI guidelines? Option A. Multi-cap funds invest only in mid and small caps. Option B. Large-cap funds are passively managed. Option C. Multi-cap funds require fixed allocation across all market caps. And option D. Large-cap funds invest in overseas securities only. Correct answer is option C. Multi-cap funds require fixed allocation across all market caps. SEBI mandates multi-cap funds to invest minimum 25% each in all capital stocks like large, mid and small caps, so that it is named as a multi-cap fund. Next question. Why do solution-oriented funds often come with a lock-in period? Option A. To ensure higher liquidity. Option B. Due to government mandates for tax purposes. Option C. To align with long-term goals like retirement or education. And option D. To discourage redemptions before maturity. Correct answer is option C. To align with long-term goals like retirement or education. These funds are tailored for specific financial objects and hence have lock-in to match the time horizons. Next question. Which of the following subcategory is expected to have the highest interest rate sensitivity? Option A. Overnight funds. Option B. Gilt funds. Option C. Liquid funds. And option D. Ultra short term duration fund. Correct answer is option B. Gilt funds. These funds are invested in long-term duration government securities and are highly sensitive to interest rate movements. Next question. In which of the following year the rationale of SEBI's mutual fund categorization formed? Option A 2016, option B 2017, option C 2018 and option D 2019. Correct answer is option B 2017. SEBI categorized mutual funds to avoid duplication and confuse across the AMCs so that every AMC should maintain under the each category only one fund should be there so that it should avoid the confusion to the investor. Next question. A mutual fund scheme that reallocates assets based on predefined rules without human discretion is option A focused fund, option B index fund, option C smart beta fund and option D quantitative fund. Correct answer is option D quantitative fund. Quant funds are rule based and reduce fund manager bias by relying on algorithms. Next question. Which of the following hybrid fund maintains equity debt ratio dynamically based on market valuation? Option A balanced fund, option B arbitrage fund, option C balanced advantage fund and option D equity savings fund. Correct answer is option C balanced advantage fund. Next question. What is the minimum investment mandate for a specialized investment fund in India? Option A 50,000, option B 5 lakh, option C 10 lakh and option D 1 crore. Correct answer is option C 10 lakhs. Next question. How do side pocketing mechanisms protect existing investors? Option A lock in profits from NAV. Option B allocate bad assets separately during credit events. Option C suspend redemptions, and option D, freeze NAV during volatility. Correct answer is option B, allocate bad assets separately during credit events. Side pocketing separates stressed assets, preventing NAV erosion for unaffected units. Next question. What impact does a rising interest rate environment have on debt mutual fund NAVs? Option A, NAVs rise steadily. Option B, no impact if it is a gilt fund. Option C, NAVs decline due to inverse price yield relationship. And option D, NAVs are unaffected in SEBI regulated funds. Correct answer is option C, NAVs decline due to inverse price yield relationship. Next question. Why are mutual funds considered to be agents of inclusive growth? Option A, they employ only rural people. Option B, they channel savings into real estate. Option C, they democratize market across small investors. And option D, they invest only in government bonds. Correct answer is option C. Mutual funds pool small savings into productive investments, broadening financial participation. Next question. In terms of economic role, mutual funds can counteract option A, commodity inflation, option B, foreign exchange volatility, option C, large scale FPI withdrawals, and option D, repo rate fluctuations. Correct answer is option C, large scale FPI withdrawals. Mutual fund inflows can offset FPI outflows, stabilizing markets. Next question. Under SEBI rules, which category of equity fund must invest at least 65% in equity and equity related instruments? Option A, ELSS, option B, arbitrage fund, option C, equity savings fund, and option D, multi-asset allocation fund. Correct answer is option A, ELSS schemes. Next question. How do arbitrage funds generate returns? Option A, through short-term debt investments. Option B, through inflation indexed bonds. Option C, by exploiting price differences in cash and derivative markets. And option D, through static asset allocation. Correct answer is option C, by exploiting price differences in cash and derivative markets. Arbitrage funds aim to capture spread between the spot and futures market for the same security. Next question. What is a thematic fund? Option A, fund investing government bonds. Option B, fund with arbitrage strategy. Option C, fund focusing on a broader macroeconomic or business theme. And option D, fund with fixed maturity. Correct answer is option C. Thematic funds invest across sectors like ESG, infrastructure, etc. Thank you for watching my video. Please subscribe for more chapters.